Hello, fellow traders worldwide. This is Gabriel again here with one more video about Forex trading, this exciting industry. Um, just to remind you, if you find these contents interesting, if you find everything in here useful in your trading decisions, please feel free to subscribe, like, and share. Just a little reminder about my background in trading. I've been trading for around 10 years, and basically my intention and my focus in here is educating people on the proper ways of trading. My expertise and also the academic background that I have with trading is part of my offer with my channel. Uh, Something that I have been using for many years in my analysis has to do with this book, right? And many others, of course. So this book is called All About Candlestick Charting. It's amazing how you can find different resources related to uh, trading patterns, the different bullish, bearish, and sideways candlestick patterns that you can identify, right? So that's basically something that I would like to share with you. Uh, Trading is not easy, and we all know that. It's simple, yes, it's simple, but we need discipline. We need lots of different resources, soft skills, right, related to patience, analysis, and of course, at all costs, avoid this kind of trading that is very impulsive, right? Okay, without further ado, let's move on to today's topic. We're gonna work on a dark cloud cover candlestick pattern. This pattern, let me pull it up in here. As you can see here on the screen, this pattern that is called dark cloud cover is a bearish reversal candlestick, right? It appears at the top of an uptrend, right? Could be in a bullish trend, right? Right before the correction, or on a downtrend right away in the correction. That is important to be mentioned, right? This signals a potential shift from bullish to bearish sentiment. Consists of two candles, right? And indicates that the selling pressure is increasing, possibly leading to a downtrend. Always remember the words possibly, probably. Anything in trading is for sure. Anything is a fact. This is the game of probabilities, and our edge is when we analyze those probabilities in our favor. Let's analyze the structure of this pattern. Okay, the very first thing in the structure is that we have a strong bullish candle, right? So this green candle appears as indicating that the uptrend is continuing. The candle represents strong buying pressure. The second candle that you see there is a bearish candle that closes within the first candle's body. That's important thing. The second candle, this red one that you can see, gaps up at the open, showing initial bullish strength. However, sellers take control and the price closes below the midpoint of the first candle. The shift from bullish to bearish indicates that momentum is weakening. This pattern is not very common to be seen, right? So I struggle, and I'm pretty sure that you struggle too when you try to find this very pattern on your charts. But it's an excellent exercise in order to have your eye and your sight very detailed on those slight differences. And I'm going to show you that on the charts. But let's analyze basically the very structure from this diagram, right? And then we're going to move on to the charts. As you can see here, the ideal thing, the ideal scenario is to see that the bear candle moves, right, in its opening, right, in its very opening, is slightly above, right, is the open, right, of the bear candle is above, right, the bull candle. You see? So here is the close of the bull candle. The bear's above is here. And the close of the bear has to, that is a must, has to be 50% or more beyond the real body of the bull candle. That is a very interesting observation that we have to take into account. Let's move on to the charts now. All right. I previously worked on my charts in order to save time in the video, and definitely, believe me, this pattern is not very common, and it has to be found exactly within the conditions that the pattern indicates, right? It's not an engulfing pattern. It's nothing like that. It's exactly like that, right? So the pattern needs to be very clear to be a valid dark cloud cover, right? So let's observe this thing here. I'm going to zoom in just to show you how it is detected here. Look at this. If I trace here my crosshair, you can see that there is slightly, right, slightly a difference between the close and the open of these candles. You see that this one, right, the bear candle, is slightly opening above the close of the bull candle. It's basically one peak, but there's a signal, right? So that is the first thing, that the bear candle opens above the bull candle. Okay, the bull candle what? The bull candle close. Remember, the candles, the bull candles open here, this is the open, and they close here. And the bear candles open here and close here. In this case, this rule has been accomplished, right? So that is the very first thing, okay? These characteristics in the structure of the dark cloud are very punctual, right? This pattern appears at the top of an uptrend. So you can see here, okay, this is a downtrend, of course. Okay, this is a downtrend in here. But what happens? This one appears right here at the very moment that the correction is exhausted, right? Here, this correction is exhausting in this moment. So that is valid. Not necessarily we're talking about that the dark cloud has to be always in an uptrend, and no, could appear in a downtrend, but in the correction, it is indicating, right, that the correction of the bullish is turning now bearish. All right. Again, what I always say in the videos, we cannot solely rely on one candlestick pattern in order to make the decision of trading. No, we pull the trigger only when we have other signals in my trading plan. I always stick to my trading plan. What I'm doing here and in every video so far related to candlestick patterns has to do with, okay, identifying the patterns. Not necessarily we have to trade because we see that pattern, okay? Because that could be a false signal, a false break, many other variables. Could be a fundamental analysis in place, and important news is going to be triggered. So we have to be careful. So it's very irresponsible if I tell you that you can trade based solely on a candlestick pattern. It's not like that. So what I'm telling you is the mechanics of identifying, and eventually, if everything fulfills your trading plan, how to place the trade, okay? Because later in the course, I will tell you exactly the leverage that we have to use, the ratios that we're going to use, right? In this moment, I just focus on identifying the pattern, and if eventually it could be tradable, how to do it, all right? So let's see. We can use other indicators to give more power to this pattern, to our dark cloud cover, right? So this is our dark cloud cover. How can I potentiate? How can I give more reliability to this pattern? I can use MACD, right? And I can use Fibonacci, right? Just to see Fibonacci ratios, just to see if there is more reliability related to this pattern. For example, I can observe here, right, that if I place my Fibo here, right, somehow there is resistance near the 50% Fibonacci level. Bear in mind this, important levels in Fibonacci are 61.8, 50, and 38.2, right? So in this moment, 38.2 was broken and almost reaching the 50, but didn't get it. And in that moment appears our dark cloud cover. That is a good indication. Another thing to bear in mind, let's see what happens in this moment. What is the behavior of our MACD here in this moment? So I can observe that my histogram, the histogram is bear, right? Okay, so the histogram is bear. That is a good thing, right? Okay. I can see that the trigger line, the red line here, is bearish and is below the blue triggering line. That is another very interesting aspect. Another thing, sessions before, remember that I am working on the 15-minute time frame, right? Minutes before, around this point here, there was a shift and a cross in the direction of the lines of the MACD. That is indicating a potential trend reversal. And in fact, it happened later on when our dark cloud appeared. All right, so far we can say that we have 1, 2, 3, 4 indications that this trend might be a good trade to take. So how to trade it? Remember, here what we have to do is to first set our entry point. Okay, let me zoom in a little bit. Okay. Remember that one of the master skills for a trader is patience. You only trade when the pattern has been consolidated. What is the consolidation? When the bear candle closes and closes according to the rule. Remember, I have my candle, my bull candle here, right? And my bear candle opens slightly above the bear candle, the bull candle, and closes, you see, around 50% or beyond that bull candle. If the bear candle had closed around 40, 30% or less, I do not take it as a valid dark cloud cover, right? But in this case, it is, because it's somehow around 55% beyond the midpoint of the bull candle. That said, I can say, okay, we can place our trade. And the bear candle is closed. All right, so I set my entry point around, say, here, right below the wick, right below the wick of the red bear candle. So this is my entry point. Okay, now what about my stop loss? The objective is not to have a too widened stop loss. In here, it's a nice descent, is around 4 pips. So I can set it a little bit even beyond. I can set it here, right? In this part. Even if you see here, there is our 50 level resistance Fibonacci, right? So I could place it even there because I have enough room for a nice trade here for my take profit. So based on my analysis, I would set my stop loss at this level, right? Matching my 50% Fibonacci. So that is my stop loss. All right, that's it. Now, what about my take profit? Okay, so I can use my Fibonacci as a reference, right? Apart from what? That, check this out. I have the previous low, okay, is right here on this level. So I could set my stop loss around this level, not beyond. Try to avoid the greedy trading, right? Because we don't know for sure if it is going to reach there, okay? So I would set my stop, right, coinciding with somehow here with the lower of this both. Interestingly enough, it could be also understood as a tweezer, right? As a tweezer button. Both of them have exactly the same closing and opening, right? So that would be an interesting point for my take profit. Said that, remember again, something here. Always my take profit has to be greater than my stop loss, right? Say, for example, how many pips am I risking with this trade? I'm risking here, say 6.2 pips, right? That's it. But I'm attaining to obtain 17.8 pips. Very good, right? So it's almost 1, 2, 3, right? So I am risking 1, right? 1 ratio here in order to obtain 3 ratios. That is good. So that has to be the constant when I am trading. Always my take profit has to be greater than my stop loss. Okay. Otherwise, it would be illogical. Otherwise, you would be playing casino and you don't know the edge. And the thing is that we have to be very cautious and careful when we trade, right? So this is the proper way to trade our dark cloud cover. So my dear traders, again, if you find these contents useful, if you like what you see here on the charts, if the information is relevant, please subscribe, like, and share. Thank you very much. See you in the next video.